What if I told you that your biggest retirement asset was worth nothing? For a majority of business owners, that is the case. Their business is not saleable. They have no one to buy it and it goes defunct. Don't let that be you. Hey everyone, my name is Kyle Glenn. I'm a certified financial planner and exit planning advisor. Thank you for taking the time to watch this video. If I have not yet met you, please leave a comment below so that I can, and I hope you enjoy this video. In 2018, Pepperdine came out with a survey that showed that in the next 2 years, a third of all business owners would like to list their business for sale. In 2023, the Exit Planning Institute came out with another study that stated that by 2030, 250,000 businesses will be listed for sale. But of those 250,000, only 50,000 will be market ready. And of those 50,000, 16,000 will sell with concessions. You should know that only 10% of all businesses listed for sell for contract value or higher. Most likely, and this is how it is for most business owners, the majority of your net worth is tied up in your business. So we need to make a strategy so that your retirement is secured as best as possible. If you are relying on your business for your retirement plan, make sure that your business is sellable. So today I want to go through 3 common mistakes that business owners make that delay their transition when they're looking to exit. The first is delaying planning altogether. Majority of business owners that I work with come to me 5 to 10 years away from exiting their business. That's typically the best timeline in order to make a slow and smooth transition for either an internal buyer, such as a key employee or a child, or to get your business market ready to go third party sale. Delaying planning makes everything more complicated, more expensive, and ultimately a bigger headache, because the more that you delay making hard decisions and delay planning for the future, you're going to go into point number 2 here, is operating out of anxiety. Normally, what happens and why business owners operate out of anxiety is because they haven't made the decisions that they needed to be able to prevent that issue. A delay in planning or delay in decision making tends to lead to stress and anxiety. But another mistake that I see business owners make very often is not integrating professional relationships. When I have a business owner client come to me, I oftentimes make a decision or a recommendation regarding their tax structure, their legal structure, whatever it may be. And the answer to those recommendations is often, I need to speak to my accountant or I need to speak to my attorney. And guess what? That's the right answer. But wouldn't it be so much better if the accountant or the attorney was a part of a cohesive board of advisors for you, so that your decision making feedback loop would be shortened and you can make that decision with clarity, having the advisors be working together? But we work in an industry where there is a firewall. I'm not able to call my client's accountant or my client's attorney and speak candidly about their issues unless there is a release of information. Most likely, you have these board of advisors already. They're just operating in their own individual silos. So these are some very common mistakes that I see business owners make. But what is the solution? I believe that the solution to the majority of business owners' problems is exit planning. And exit planning is not about selling a business, but it is good business strategy. I believe that bringing exit planning into the present tense as a part of your business strategy allows you to be able to make better decisions. Having the end in mind provides clarity. Let's back this up to a personal level. With retirement planning, having the end in mind is you want to retire on a beach in Cancun and have $150,000 a year to live off. Well, okay, now we can reverse engineer those lifestyle and those income goals in order to determine the ending value of your portfolio that you need at age 67, for example, in order to live the next 30 years. The same is with your business. You need to know where you're going and then reverse engineer it to today to determine what type of decisions you need to get there. But when I talk to a business owner, they want to skip all that and they want to go directly to the exit options. And I get it. Transactions sound so good and it can feel productive and profitable because with a transaction, there's a dollar attached to it. There's a buyer on the other end. Many of us just assume that someone's going to buy our business because it's profitable. Or you're giving this to a son or to a daughter, now you're just giving them a headache. If your kid is paying you for the business, the risk to you is that they're not able to operate the business in the same way you are because everything is in your head. And that might result in not getting your desired payments from the business because it may go under. So, before we talk about exit options, we need to talk about personal and financial readiness. How much money do you have outside of your business? How much of a sale is contingent on reaching your success? If you only have a couple dollars outside your business, that means the sale is very, very important to your retirement success. So that directs what type of exit we have. A third party sale typically generates the best end results in terms of contract. An internal sale to a child or to key management does not. It comes with a lower contract. So if you don't have a lot of liquidity outside of your business, you're most likely going to be forced to go third party sale, even if that might not be your desire. If you have legacy goals or you want to keep the business in a close and tight knit group of people, you may not have that option. On the personal side, who are you outside of your business? You've been growing this business for decades. You've had a very good income. Most likely, you have some level of achievement addiction or addiction to adrenaline of business, and I get it. But if you're not retiring to something, you're going to regret it. 70% of business owners regret the sale within the first year. Don't let that be you. Do planning on the front end, do not delay it, so that when that exit does come, you are prepared and you can have a successful transition.